Hello there! Welcome to this week's lesson. Today we want to get into the different instruments we offer. No, not those instruments, financial instruments, so you can have a better understanding of them and how they work. You most likely noticed that inasmuch as we are ACM Gold and Forex trading, we have offered you additional instruments for you to trade. Global equity markets are basically the instruments you would typically find in the shares market. You can trade these in more or less the same way as you trade your Forex and metals and on the same platform, but there is a difference.
On the MT4 we have 7 categories of instruments you can trade. In the Forex category we have foreign exchange. This category has 3 groups. First of all, the major Forex pairs. They are the 7 biggest economies against the US dollar. Next we have the minor or cross pairs. These are big economies against each other excluding the US dollar. And then finally we have the exotic Forex pairs. That is the USD or Euro against emerging economies like the Mexican peso or the South African rands. The next category is metals, which has gold and silver against the USD. Next we have light sweet crude oil in the energy category. A commodity could be defined as a reasonably homogeneous good or material bought and sold freely as an article of commerce. Commodities include agricultural products, fuels and metals, and are traded in bulk on a commodity exchange or spot market. In the commodities category, we have cotton, palladium, platinum, coffee, copper, cocoa, corn, natural gas, orange juice, soybeans, sugar, wheat, RBOB gasoline, rough rice, and Brent crude oil.
In the case of financial instruments, an index is an imaginary portfolio of securities representing a particular market or a portion of it. In our indices category, we have the Nasdaq, the FTSE, Dow Jones, S&P 500, DAX, Nikkei, CAC 40, the Johannesburg Stock Exchange Top 40, ASX, SPI 200, Hang Seng 40 Index, S&P 500 Volatility Index Future, IBEX 35, and the FTSE MIB. The Dow Jones Industrial Average, or the Dow for short, is considered to be one of the premier stock indexes in the US. It measures how well the top 30 publicly owned companies are traded. Despite the name, barely any of the companies have anything to do with industrial production and are instead representative of some of the biggest companies in America. It is closely watched by investors around the world and is highly indicative of market sentiment, thus making it sensitive to both local and foreign economic and political events. The companies that are part of the Dow are so large that you probably deal with at least one of them every day. Imagine life without AT&T, McDonald's, Pfizer, or Intel. Yes, these companies are all listed in the Dow. The Standard & Poor 500, more commonly known as the S&P 500, is a weighted index of the stock prices of the 500 largest American companies. It is considered a bellwether for the American economy and is used to predict its direction. After the Dow Jones Industrial Average, it is the most traded index in the US. Some mutual funds, exchange-traded funds, and other funds such as pension funds are designed to track the performance of the S&P 500 index. Hundreds of billions of US dollars have been invested in this fashion. NASDAQ stands for National Association of Securities Dealers Automated Quotations. It refers to the largest electronic screen-based equity securities trading market in the US, comprising of approximately 3,700 companies and corporations. It also boasts of having the largest trading volume among the world's stock markets. The Nikkei, similar to the Dow Jones Industrial Average, is the most widely quoted average of the Japanese stock market. It is a price-weighted average of the top 225 companies and is supposed to be reflective of the overall market. The Nikkei includes companies like Toyota, Japan Airlines, and Fujifilm. The DAX is short for Deutsche Aktien Index. You're probably better off remembering just DAX. It is the stock market index in Germany that consists of the top 30 blue-chip companies that are traded in the Frankfurt Stock Exchange. With Germany being the largest economy in the Eurozone, the DAX is normally the most closely watched index within the whole Eurozone. Some companies that are part of the DAX are Adidas, BMW, and Deutsche Bank. The FTSE index tracks the performance of the most highly capitalized UK companies listed on the London Stock Exchange. There are several versions of the index, such as the FTSE 100 or the FTSE 250, depending on the number of companies included in the index. The Hang Seng Index is a stock market index in Hong Kong. By recording and monitoring the daily price changes of the stocks included in the index, it tracks the overall performance of the Hong Kong stock market. This index is currently compiled of the HSI Services Limited, which is a subsidiary of Hang Seng Bank.
Global shares are foreign stocks traded in local exchanges, also known as global registered shares. When it comes to the world shares, the list is extensive. We have Apple, BMW, Barclays, eBay, Facebook, Google, the Goldman Sachs Group, Johnson & Johnson, Nokia, Microsoft, Total, Toyota, Twitter, Vodafone, Volkswagen AG, Walmart, and last but not least, Yahoo. A future is a financial contract obligating the buyer to purchase an asset or the seller to sell an asset, such as a physical commodity or a financial instrument at a predetermined future date and price. The spot futures we offer are the British Pound, Australian Dollar, Canadian Dollar, Euro Future, Gold Future, Japanese Yen, New Zealand Dollar, Swiss Franc, Silver, the South African Rand, Light Sweet Crude, and Brent Crude Oil. This information is available on the MetaTrader 4 platform. All you have to do is to right-click in the Market Watch and choose Symbols in the drop-down menu. The pop-up will appear with the categories we have, and all you need to do is open the relevant category and view the information about the instruments within it. Here you can also see additional information, like the swap on the trade you have open at the moment. When the outlook for a certain stock market is good, international money flows in. On the other hand, when the stock market is struggling, international investors take their money out and look for a better place to park their funds. Even though you may not trade stocks as a forex trader, you should still pay attention to the stock markets in major currencies. If the stock market in one country starts performing better than the stock market in another country, you should be aware that money will probably be moving from the country with the weaker stock market to the country with the stronger stock market. The general idea is strong stock market, strong currency. Weak stock market, weak currency. The basic idea is when a domestic equity market rises, confidence in that specific country grows as well, leading to an inflow of funds from foreign investors. This tends to create a demand for the domestic currency, causing it to rally versus other foreign currencies. On the flip side, when a domestic equity market performs terribly, confidence falters, causing investors to convert their invested funds back into their own local currencies. You might notice that energy, commodities, indices, and spot futures have a date next to them. That is because these contracts expire. The light sweet crude oil contract expires on the 18th of April 2014. This means you need to close your open trade before this stated date. We usually send an email that informs you of what is expiring on which day, allowing you to close your trades in time. On the 14th of April 2014, the instrument will be disabled in that you cannot open a new trade on it, but you can modify or close your trade between the 14th and the 18th. A new contract will appear with a new expiry date. For instance, this is HSI April 14, which will expire on the 29th of April 2014 and is going to replace this March 14, which is set to expire today, the 20th of March 2014.
Alright, now for some practical examples. Keep in mind that the leverage varies from one category of instrument to another. Futures have fixed margin by exchanges, but we have leveraged them as well. For forex and metals, the leverage is 1 to 500. For commodities, indices, and energy, the leverage is 1 to 125. In the case of spot futures, the leverage is fixed at 505, 50 and 50 cents, and $5.05 for standard, mini, and micro contracts respectively. All of this information is available in the contract specifications pop-up. Let's say we sold one micro contract of light sweet crude oil at 97.84. If we sold 10 barrels, that means that we should have received $978.40. With a leverage of 1 to 125, our margin will be $7.83. This means that we need to have a minimum of $7.83 in our account to place this trade. In our next scenario, we sold one micro contract of JSC at 42364. With a leverage of 1 to 125, our margin will be $338.91. This means we managed to place this trade because we had more than $338.91 in our account. Also note that there is a commission on trading all instruments except forex and metals. The commission is fixed at $30 a standard lot, $3 a mini lot, and 30 cents a micro lot. Keep in mind that not all markets are 24-hour markets like forex. Some of the instruments have opening and closing times specific to the stock exchange that they're from. The JSC is open between 9 a.m. and 5 p.m. here in South Africa, and therefore you'll be able to trade the instrument between 9 a.m. and 5 p.m. Locally, the Dow Jones, Nasdaq, and S&P 500 will open with the New York Stock Exchange around 3 p.m. HSBC Holdings, Barclays, and BP will be open with London, while you'll not be able to trade VW, Siemens, or Metro AG until Frankfurt opens. Spend time learning more about the global equity markets. They are made up of companies you interact with every day, whether it is the car you drive or the mobile phone you use, or the grocery store you visit most often. Knowing how they work and which currencies they affect might improve your understanding of what you spend most of your time trading. Have fun!